Okay, welcome back to RCM Tech Talk. John Williamson and Francis Burton here. We're going to talk about payment and adjustment posting issues. Posting is generally thought of as the least important, area of the revenue cycle. It's always at the tail end, but at the end of the day, all of your accounting and a lot of the sort of hidden opportunities exist in this function. And a lot of it has to do, for example, with maybe you were being underpaid, but no one realized that. And the person doing the posting, in theory, should be able to cross-check whether that a service was paid based on the current fee schedule or not. These are the kinds of things that are real value adds that someone in the posting department can bring to the table that may be being completely ignored and maybe have been completely ignored for years on end. Alternatively, they could also be sweeping problems under the rugs because there's not enough time to deal with them. So this is where adjustments can get you in trouble because folks are adjusting things off or putting them in the wrong category, which means you're not actually following up on them to go collect money. Francis, what do you see as kind of why are payments and adjustment posting such a big deal?
Well, for one thing, you need to balance, right? You need to balance with what's coming in to what's hit the bank. That's the biggest thing I see where everybody's working to balance to themselves. And it doesn't mean that everything that got posted is in the bank or everything in reverse that's in the bank has gotten posted. So that's the big view of it.
Well, a lot of this is, you can start again with reports to get yourself educated as to what's going on. So problems that will lead you to questions when you're talking to the folks doing the posting. Things like credit balances in both insurance and patient AR. A lot of times a credit balance has to do with sort of incorrect posting or maybe auto posting that isn't very smart. And when a reversal and correction comes in, it doesn't do the right thing. Or payments have been, for whatever reason, things have happened on an account that created credit balance that isn't real. So understanding credit balances across your different insurance and patient AR, a good starting point. Adjustment detail by volume and type. So, are your, for example, your bad debt or things out of whack? Now, a lot of folks doing posting know that you're looking at the bad debt, so they put it in a different category because that's where you hide problems. It's really important to sort of see those things and understand at a more detailed level so that you can ask the right questions about how posters make decisions about where money goes, because a lot of it is decision making at the individual level at the time of posting. And then payment and adjustment reversals by volume and type. So, when you have to reverse a charge and put a new charge on or reverse a payment because of a recoupment or anything else, how is that process being done? Is it actually being done correctly? Could it be done in a more intelligent way to actually track what's going on and maybe uncover a different kind of issue that might be in play? A lot of folks, especially in the recoupment side of things, they don't understand how to sort of use the information they're getting from a recoupment, which is kind of an after the fact denial, to then go track that back to root cause. They sort of do things at the adjustment and posting level that muddy the waters so folks don't know. So those kinds of information, that kind of information you can get from reports, very helpful walking into these conversations. Francis, what would you suggest their folks are talking about and learning about at a detail level?
Well, I would be asking the posters, what do you do on a daily basis after you've posted a set of EOBs? The remits that come in, making sure that they've been reconciled, the ones that you're posting manually, are you balancing? The process in which you total up your daily amounts and get it to that other department, the accounting department. How is that translated? I look for what are the ways that your recoupments are being managed as far as the remit goes. If you have a check for $5,000, but 500 of it is a recoup, what happens to that recoup? Is it automatically being queued for somebody to follow up on because everything's getting reversed? I have seen cases where the contractual adjustment isn't reversed, only the dollar recoupment happened. I have seen cases where remits are missed in the clearinghouse because the amount of the check you would have gotten and the recoup netted it to zero. So those are never posted. I have also seen checks that sit unposted because they don't want to deal with the recoup side of it, right? People don't like it. And some of it is because they don't understand what to do with the reversal. You want to, really, if you are getting a lot of recoups, you kind of want to know what's happening with that mail that I have mentioned in a previous statement, where the recoups usually come by mail first. I mean, not the recoup, the refund request. So if you're getting recoups, it's probably because the refund requests have gone unmanaged or somebody's getting behind. So it's kind of double work. You want to know for credit balances. I would run a report. Show me how much you have in credit balances. And I have had people say, well, that kind of self-monitors as far as refunds. Every month we go in and we kick out refunds to patients if it's in the patient world. Well, how do you know that it's because the patient overpaid? What if it's a contractual adjustment that's overly adjusted, whether by the primary coming through a second time or a secondary coming behind the primary? I call those false credits. They're not real money. Who is investigating those? I would want to know if you have a department for that. The inappropriate adjustments. A lot of times they're not purposeful. Somebody has automatically, they do an entry and the system auto adjusts the difference. So they don't even know it's happening. The report that I go straight to is the adjustment detail report. That's where you get your categories. Here's all your contractual adjustments in one single sum row. Then you have the breakdown, right? You have the small balance, the timely, the bad debt. And you can kind of see the buckets. And again, this is something else I have said before, where you start to see the custom created ones, that they're some of them I've never even heard of, but it's what does this practice have in the way of adjustment options so that you can say, why is it happening? And again, what is the pattern? The 100% adjusted, the 100% paids. That's my favorite. I have had reports ran where the fee schedule is actually too low on maybe 3 items. They've been getting paid 100%. There is no contractual adjustment. Well, right there's a clue. Are you monitoring your fee schedule? The whole whether or not you're getting paid what you should, that's a whole nother ballgame. People have a tendency to not even try to see if their fee schedule is being honored in the contract because they don't have their allowables loaded. How do you monitor that, right? And so you want to the 100% adjusted. That's the easy ones. If you charge something $4,500 and you see an adjustment for $4,500, you're going to get a pattern of it. Why are they doing that? It may be legitimate for a little while because you're finding out that service is bundled. Well, then stop billing it. Don't inflate your AR. Don't cause people to have to do an adjustment. It shouldn't be a continued pattern. How can you stop the ongoing, inappropriate transactions?
Yeah, all really good points. Posting, I think, is it's unfortunately the junk drawer. And usually if you're walking into an organization, somebody's gonna have to clean out that junk drawer and sort of prioritize what should be where, whether that's, penny charges on value-based care claims that never got adjusted off, and now there's thousands of them, or it's sort of inappropriately categorized adjustments, or maybe you didn't have enough adjustment categories set up, so you just put everything in one place. Or to your point about the fee schedules, your posters aren't educated or aren't including any type of confirmation step at the fee schedule. This is the opportunity, just like billing is the opportunity to do sort of quality assurance before the claim goes out the door. Posting is the place to do quality assurance before an account is closed. And these are sort of checkpoints. And a really sophisticated organization will actually have the biller do a time of billing adjustment verified at the contract fee schedule level and then validation can happen at the posting level as to whether or not they paid as expected. That's a sign of a high functioning revenue cycle department. When you've got that kind of check and balance, at least one of those two parties better be doing that, because a lot of folks have been sitting on underpayments for years, and whether or not they're being underpaid by $5 or $50 or $500, that adds up quickly. And the opportunity to go collect that underpayment is also quite valuable. So there may be money sitting in the adjustments and contractual adjustments that have already been closed out that you're going to want to be able to identify, and having your posters sort of level up to be able to have that, even if it's not 100% of the time, to be able to have that extra step and the knowledge of how to audit what was paid versus what should have been paid. That's the kind of investment in training and process that can uncover and recover a lot of opportunity in dollars.
Well, and I'd like to add to that, John. You mentioned a keyword, closing. I would certainly want to know if the system is hard closed. We call it hard closed each month, because if it's not, then you can make adjustments, historical. You can take stuff out of history, right? You can do historical transaction adjustments today. So a report where you had $1,000 check last month, somebody could go void that out today, and it's altered the past. You may not know it unless you're saying, I think I'll run last month's report again to see if anything changed. But if you don't do a hard close, people can kind of mess with the past. So you want to know about that. Also, adjustments that should be reversals. If you charge something that should not have been charged, that should be a charge reversal. Otherwise, that provider, for one, is getting credit for that charge when really it shouldn't have even gone on the books. So if you adjust it, that's kind of like creating a separate lane. You shouldn't have a different lane for that. It should be a reversal. I don't think it's intentional or by lack of education that somebody would create adjustments that way, or use a special code, or think I'm just going to adjust it off because it's easy. They don't know the impact it has on the collection rate. It will, your collection rate may look like it's 99% when really it's 92% if you really start to get down into what those adjustments are doing to your report.
Very good points.